Good morning, everyone, and welcome to Market Fatafat right here on ET Now with me, Avan Dabash. It's a market that is deep in the red. All sectors, particularly metals, are looking quite choppy, and we're clearly mirroring what's going on across the globe. Well, let's get straight to business. We've got a whole host of stocks that we'll be flagging off. Our team of research analysts are all standing by, and to guide us on the technicals, we have Gaurav Ratnaparki as well as Kunal Botra. Well, let's begin then. The first stock in focus is Kesoram and Karanya. Take us through why that stock is in focus today.
Well, they have come out with a rather important update. They're going to demerge their tyre business into a separate undertaking, and they will be naming this demerged tyre business as Birla Tyres Limited, which will be also listed on the bourses once the demerger happens. The shareholders will get the demerged entity in a 1:1 ratio. Clearly, that's an important update as far as the company and the developments related to that are concerned. The stock, however, is taking it on the chin really in today's session, down almost 13%.
Oh yes, indeed. That's a double-digit cut coming into the stock. The demerger plan is currently underway. Let's move on then to a tyre stock that's in focus, and CEAT is a stock that merits a mention. Kunal, where is it that you're placing your bets here?
Yes, Avan, I think CEAT has been, into focus. I think the volumes today are extremely high. We've not seen these kind of volumes for CEAT, at least in the last 1.5 odd month. Now, in terms of price levels, it's on the verge of a breakout. 1270, 1268 was a breakout point for CEAT on spot levels. It's confirmed, a trade above it. Whether it closes or not above it, I think that's more critical. But I believe with volumes backing this move, the price should sustain up higher. So suggesting a buy on CEAT, 1340 as a positional target and stop loss at 1235.
Keep an eye out on CEAT, up 0.5%. But moving on to a stock that is struggling at a 9-year low, and that is Bharat Forge. Mubina, take us through the news.
Well, yes, a massive crack witnessed in the stock price, 8% lower as we speak. And this could be attributable to the fact that the company has, or rather Phillips Capital at least has spoken about what the North American Class A trucks order are, which is something that would have an impact on Bharat Forge as well. And it's not good news. It's a 15% decline on a year-on-year basis and a 36% downtick on a month-on-month basis. The North American Class 8 orders have come in at 27,900 units, and that, of course, is not boding well for Bharat Forge, which, like you said, is at a multi-year low and seeing one of the biggest cracks on an intraday basis in many years.
Okay, keep an eye out on Bharat Forge. The North America Class 8 orders down 15%. Meantime, it's Hero Moto as well that's in focus from the Auto Pack, and that stock is on the brokerage radar today. In fact, Nomura has a view on it. They maintained a buy rating. They've got a target price on the stock at close to 3,542. On the analyst day, Nomura has to say that the management has indicated that the insurance costs have impacted demand. They do not see any change in the lending from NBFCs, and digital and financial inclusion is going to drive their rural sales. Exports has already entered 35 countries out of 50, and the lower commodity trend will be sustained for margin benefits to accrue. That's the Nomura take, 3,046 on Hero Moto. From autos to metals then, the worst hit sector in trade today, and it's Jindal Steel, which is feeling the pain, down 6%, Siddharth.
Well, yes, Avan, and completely, a 180-degree turn of events for this space, that is metal space, compared to, what the space was doing a couple of days back. On back of true stock, we have seen metal stock bouncing back. Some of the names like Jindal Steel went up substantially because of short covering. And now when they are correcting, we are seeing fresh formation of short positions. 150 support has been breached when it comes to Jindal Steel, and we are seeing aggressive formation of short positions with high volumes, which opens further downside for this counter.
Watch out for Jindal Steel, and fresh formation of short positions is definitely being observed. Moving on then, it's Grasim that's in focus as well at 820. Gaurav, is it a good time to buy? Where's the stock headed? Is there more downside? Okay, we have not still connected with Gaurav, so I'm just going to give you his technical take. He believes that there still is more downside on the cards for Grasim, and that the stock is poised to test the recent lows that it witnessed of 756. So currently at 820, there's quite a bit more downside on the cards, 3% lower for Grasim. Moving on then, Mubina, let's chat about Prakash Industries. That stock too is buzzing in trade, but not for the right reasons.
Well, that it isn't because the Excise Department actually tweeted this morning that they have attached some movable as well as immovable properties of Prakash Industries, and this is worth about 117 odd crore rupees. Do remember that Prakash Industries as well was caught up in the coal block allocation case, and hence under the PMLA or the Prevention of Money Laundering rules, the ED has made this move attaching the properties. They're worth more than 100 crores, and hence you are seeing the crack come by in this mining stock.
Okay, watch out for Prakash Industries, and we'll have to wait and watch how the news now shapes up. But let's focus in on another auto stock, and that is Tata Motors. Not good news, Karunya.
Absolutely not. Of course, it's no secret, that JLR has been reeling under pressure, whether it's the financial performance, whether it's the, volume front or the global weakening outlook. It's just completely in a soup right now, and S&P global ratings on back of the weakening performance and concerns regarding profitability has downgraded the stock, not just of Tata Motors but also of JLR. They have actually for the issuer credit and senior unsecured notes downgraded their rating to BB minus from BB. The ratings remain on a negative watch, reflecting the uncertainties for JLR from a fast approaching Brexit deadline.
Okay, watch out for the stock in focus. That's Tata Motors. S&P cutting the credit rating. Lupin too is having a fairly rough run in trade today, but this is despite the fact that there has been fairly decent news coming in. They have in fact launched a generic prostate gland drug in the United States, and this is a hyperplasia treatment drug that they have announced in the US. And according to the company, this has strength of 4 and 8 mg after receiving the approval from the US FDA. And the product is a generic equivalent of Allegrun's Rapafalo capsules. But it has close to, the Rapafalo drug has, sales of close to $198 million in US. But the stock is under pressure in tandem with the rest of the market. To Dish TV then, and clearly no one's tuning in. The stock has really been suffering, and today is no exception to that.
Well, Jio is disrupting more than one sector, and certainly the pinch of that is badly felt by Dish TV. Stock is correcting substantially. In fact, in last 2-3 months we have seen stock correcting from 70 or 50% from higher levels of 70. It's scoring 35 now. From very short-term perspective, this is second consecutive day that we are seeing aggressive formation of short positions. 36-37 support, which was there, it did bounce back previous month from these levels. Even that support has gone with formation of short position. So no respite for this name.
All right, keep an eye out on Dish TV. Yes, Rel Jio has caused quite a bit of sleepless nights for these companies, and Dish TV is sure feeling the heat. Moving on then, let's pull up a large cap IT name, and that's TCS, bucking the trend in trade today. Kunal, is there more strength on the cards?
So even though the price performance today would be absolutely flat, but you have to look at this in context of the last 2 days or 3 days of stock price for TCS. It's bounced off from its 50-day moving average. Now 1985 is acting as a strong support level, and when the markets have been acting a bit volatile, I think Nifty IT and especially names like TCS, they have been holding steady. So I believe TCS could be a good bet or a contra bet even at current levels. 2060 could be an immediate target on the stock price.
All right, some important levels to map out there on TCS just turned flat as we speak. At number 12 then, it's Arvind and Mubina. What does UBS have to say?
Well, they seem to be pretty optimistic on the stock, and hence you are witnessing this massive uptick come by on the share price of Arvind. They have a buy with the target at 130 rupees, as they believe that this demerger that has recently taken place in the company does offer an opportunity to ride the garmenting capacity. Of course, the success of the textile business for Arvind will only lie in project execution. But yeah, otherwise even the materials and water business could drive a re-rating for Arvind.
Okay, that's the stock that's buzzing away in trade today, nearly 5%. Moving on then, PSC and REC as well are big newsmakers in today's trading session. Karunya, what are the ET reports saying?
Well, it's the complete reversal of what was being said earlier, that REC will buy PFC under the government's plans, but what essentially Economic Times reports today are suggesting is that the government is proposing now that PFC buy REC in the 14,000 crore worth of deal. The cabinet, in fact, may be considering this all-important proposal today at a meeting because without the cabinet nod, one cannot go any further, of course. So watch out for the outcome of that meet if it is being discussed at all, and for more updates. And that's exactly why PFC and REC have been abuzz for quite some time and continue to be under pressure.
All right, these two stocks continue to remain the cynosure of all eyes. You saw some reprieve coming in this week, but by and large, I think the trend has been on the downside. Sun Pharma, ditto is the case. The trend has definitely been on the downside. What are brokerages now saying after the clarifications issued by the management and the stock has been suffering relentlessly? Well, Nomura says that the governance issues linger despite the call that we saw with the management, and the commentary fails to allay any investor concerns on ethical conduct by the promoters. It's a neutral rating on the stock. Target price 513, and they believe that the issues will continue to remain an overhang till we get more clarity. That's Sun Pharma at 436. And Ashok Leyland within the auto space is a stock to watch out for. Why is that, Siddharth?
Well, most of the auto names are correcting, Avan, and some of the ancillary names are correcting, and we can give a global reason for that. But for Ashok Leyland, reasons are very local. We are seeing CV sales not doing pretty well. Yesterday we were talking about that how there is short formation which is taking place, which can challenge its support of 105. Now that support of 105 has gone today, and today too we are seeing formation of short positions around 11 to 12% rise in open interest with fall in price. Needless to mention, these are shorts, which opens a downside for this name also.
All right, that's certainly a stock to keep on the radar, down about 3% in trade. 15 down, 15 more to go. We take a quick break, come right back. Lots more lined up on Market Fatafat. Welcome back. This is Market Fatafat. It's a weak market at hand. We're well identifying all of the stocks to keep on your radar. So let's move right on to stock number 16, and that's heavyweight HDFC. Gaurav, where do you see the stock headed, and where do you believe it's a good buying opportunity?
The HDFC has rallied significantly for last few weeks. However, the rally now looks matured, at least from short-term perspective. On the higher side, the level of 2000 acted as a strong barrier. The stock couldn't sustain in the higher territory, and from there it has entered correction mode. So I'm expecting a short-term correction in this counter. So there won't be any buying opportunity, at least from short-term perspective. In fact, the stock can tumble back towards the level of 1880, 1850 from here on in the next few sessions.
All right, that's something to watch out for. 1925 on HDFC. Meantime, JK Paper as well is in focus today. In fact, the stock is veered off from the high point of the trading day. But Mubina, what exactly is the news?
Well, the news over here is with respect to the anti-dumping duty that has been imposed on uncoated copier paper that is imported from Indonesia, Thailand and Singapore, and paper stocks reacted very positively when this news broke. It was in fact up more than 2% in morning trade. Do remember that the likes of JK Paper, West Coast Paper, Tamil Nadu Newsprint had filed a petition against the export of uncoated copier paper mainly in A4 and A3 and legal size from Indonesia, Thailand and Singapore. The government has completed the investigation and the duty has been imposed for all paper originating from these three countries, and hence you are seeing an uptick come by.
All right, watch out for JK Paper, higher by a % in trade. Meantime, it's Jet Airways as well that's in the limelight. Let's talk a little bit about the deal Karunya with Etihad.
That's right. Etihad, in fact, is in talks with the Jet Airways. This is, of course, regarding infusing fresh funds and picking up further stake in the company. The CEO of Jet has assured the staff and tried to soothe investors also by saying that they are very close to finalizing the deal, and it could, in fact, fructify any time around mid-December as well. And once it happens, they will be infusing fresh funds into the company, which will be used for restructuring the route and, of course, pairing with debt.
In focus today at 305, that's Jet Airways. Well, let's bounce from one airline to another, and it's Interglobe Aviation as well that's in focus today. From 998, it's above the 988. It's above the 1,000 mark in trade today. The company has appointed Ranjoy Datta as their principal consultant. This is to develop a 5-year business plan for the company. Remember, he was the president for Air Sahara for 2 years and an advisor as well to restructure Air Canada and US Airways. So that's keeping the stock in news at 1,002. Moving on to number 20 then, and Siddharth, let's discuss SAIL. What exactly is the take as it's languishing at the low point?
You know, all these ferrous stocks, and especially the PSU names, they were showing signs of bounce back, and then the true stock took place. There was some sort of covering. But again, you know, as uncertainty loomed large over this trade war, we are seeing further correction in metal space. And what has happened in today in SAIL, Avan, is that there's fresh formation of short position, and this process, stock has you know, breached some important support which was around 54 levels, trading at, you know, yearly low, and if it goes down probably even 0.5% more, then it can be trading at 2 years low. So certainly a trend which appears to be a downtrend in SAIL is aggravating.
Right. Clearly that's being seen in the stock today as it's now at 53. Meantime, Reliance Capital from the ADHG pocket as well is under pressure. Kunal, do you believe that it could accelerate even further?
So it seems like, Avan, because you know there was in the last 2 months precisely, I think from October start, the stock was into some sort of a range. You know, the bounce was only you know, short-term oriented, and the stock failed to cross any key averages. But now, you know, when you look at the stock price, it's come back to hit those key support levels and retest at October lows. So if it breaks that you know, support of 220 to 280 odd on spot levels, then it could be a new low or a fresh you know, multi-week low for Reliance Capital, and that should you know, intensify the selling pressure. I would suggest a sell with a target of 205, stop us at 230.
More selling pressure on the cards. That's Reliance Capital currently at 224. At number 22, Creedon Infra as well has won some orders, and that's keeping the stock in focus today, Mubina.
That it is. There is an order win by the company which has announced on the exchanges yesterday. They've spoken about an order from the government of Maharashtra, and this is worth 105 odd crore rupees. The company, remember, has won quite a few orders in the recent past. This is another one that they have recently won. In fact, just about 3 weeks ago, they announced a huge order win. This 105 odd crore rupee order has been won by the associate company, that's Vijay Nirman Company Private Limited. Like I said, it's an LOI from Maharashtra, and it is for package 4 of the Mumbai-Nagpur Super Communication Expressway, which is to be completed over a period of 12 months.
Keep an eye out on Creedon Infra, but moving right on is the telecom stocks as well that are in the news today, Karanya.
Yes, Avan, pretty much, and they've seen some amount of recovery come by. They've been under pressure since the start of the trading day, but the news was initially that the Department of Telecom is likely to appoint audit firms to audit the revenues of private telecom companies by the end of this month, because it was being said that there was some sort of an issue, some sort of a mismatch as far as the revenue reporting is concerned. But we just had an update from the Supreme Court a couple of minutes back, and the Supreme Court has rejected Jio and CCI's plea to probe this telecom cartel. So that's some amount of relief coming by for listed telecom players like Airtel and even a Vodafone Idea, and that's why they continue to be in focus.
All right. Yes, indeed, some amount of reprieve coming in with the Supreme Court rejecting that plea to probe the cartel. Meantime, it's HDFC AMC as well that's in focus. In fact, the SEBI settlement order has come for alleged mutual fund compliance violations, but the company said that the SEBI order will not impact the financials. Nonetheless, investors seem a tad perturbed, down 0.8% on HDFC AMC. And it's NMDC. We discussed this stock yesterday, but let's chat a little bit about the F&O trends today, Siddharth.
Well, trend is negative. Stock is at 2.5-year low, so that clearly states what kind of trend the stock is in. We are seeing that though stock is correcting, volumes are not that very high. There is 4% built up, but then looking at the kind of stocks which we discuss in metal and mining space, a 4% build up is not comparable to the kind of short positions which we are seeing in some of the other names. So it is approaching its very strong support zone. So keep eye on that. 93-94 support is breached, but the immediate support is at around 90-91 levels.
All right, that's the view coming in on NMDC, currently down about 3%. Meantime, let's focus in on FMCG name ITC, and at 275. Gaurav, where is it that you see the stock headed?
Yeah, ITC started the week on the negative note, and on the way down the stock has broken its crucial daily moving averages, which shows that the bears are having upper hand in this counter. Even in today's session, it has broken a crucial rising trend line, which adds to the downward pressure. When the daily momentum indicator has given a fresh sell signal in the last session. So from trading perspective, one can initiate a fresh sell position in this counter at current level, with stop loss placed at 281 and target on the downside will be 263.
All right, that's a sell call coming in on ITC. Moving on to another heavyweight then, and it's ONGC in news today, and CLSA is pretty categorical about its view, Mubina.
Well, that it is. They seem to be very, very optimistic, and they've in fact made a very interesting statement saying that at these levels of 143 odd rupees, CLSA is ONGC rather is a no-brainer buy, and they are looking at levels in fact of 225 rupees as their target price. The market value itself of the listed investments is at 41 rupees per share. The core business is trading at 4.5 times PE. So this is certainly mouth-watering valuations and near-term triggers, because there is recent news which raises the possibility of a no-subsidy burden on ONGC in FY19, and hence they have a no-brainer buy. Unfortunately, the stock price, however, has completely erased those early gains we were witnessing of 1.5 to 2% and now interestingly is lower by 1.8%.
All right, that's a no-brainer buy at the current levels according to CLSA. Moving on then, Karanya, CLSA also has a report on Kerala.
And it's a rather bullish one. They've upgraded the stock to a buy. The target they've given is 430 rupees. The risk reward according to them seems quite favorable at 18x FY20 calendar year earnings. Strengthening consumer business in India is another trigger that's keeping them upbeat on this counter. Monetization of vaccines and biosimilars, not only in India but entire emerging market space, is something that they think is going to drive the growth from here on.
All right, CLSA has upgraded the stock target 430. Moving on then, let's also focus in on another stock that's in news today, and that is Bombay Dyeing. In fact, the stock is in focus in the trading session today, as you have the company which is going to prepay some of the debt as their cash flows improve. They said that they are likely to start that prepayment soon. This is responding to an Economic Times report that had said that Bombay Dyeing is figured on the list of 77 companies with a default risk probability. So there's a prepayment to more than 500 crores from two of their towers in Mumbai, and they will also look at revenues to come from the same. Let's move right on to the last and final name in trade today, and that is Tech Mahindra from the IT space, flexing its muscles, Siddharth.
Well, yes, Sawan, not everything is negative in this market. IT stocks doing well. We yesterday spoke about a lot of IT names. Today, Tech Mahindra is making a comeback. It's challenging its resistance zone of 730, 735 in the middle of that zone right now. And though we are not seeing very high formation of long positions, cash volumes in volumes in cash market are quite encouraging to someone to take this move seriously.
Okay, that's the take coming in. Clearly not taking it too seriously, but on that note, we'll wrap it up right here on the show. Thanks so much for watching. We have Markets at Noon coming up.